So recording, we got that set up. Everybody ready to go? All right, let's start it up. Reset the timer and let's go. All right, what is up, everybody? Welcome to another real estate wholesaling analysis series. This is episode 18. Welcome to getting understanding of how to analyze some properties in terms of like real estate wholesaling or investing for like your own self as well too. It's pretty much like the same type of analysis because again, you're putting yourself as a buyer into perspective, so you're able to understand that. So welcome. If you're new over here, this series does get hosted every Monday, Wednesday, and Friday at 6 p.m. Pacific Standard Time. And it is completely for free to join and get a little bit more knowledge in terms of analysis of how to analyze properties in your market area, because we do use live examples of different markets and get an understanding of how it is like per city or wherever it is that we land on our series for today. But I'm your host, Elton, like Elton John. I just don't do any singing or any of that. And so don't be prepared or ask for me to do any of that, please. I appreciate it. But with that being aside, let's get started to our series. Now, I don't want to talk too much about me, but just a little bit about my background is I've been wholesaling for the last 10 months. Getting to understand to become like an investor for myself as well too. So that's why a lot of the analysis comes to like putting yourself into being like your own investor, because that's what you're basically analyzing. You're analyzing as if you're the actual end buyer in terms of the wholesaling business. And it is a business, so always be ready for the unexpected. And additionally, too, a little bit more than that, my background beyond real estate, it has been always been in sales and advertising and marketing. So I do have a decade of that under my belt. And I started very young, just read a lot of books, self-taught, network, just ask a lot of questions, and from there, just taking an action. And from experience, you actually learn like a lot. So that's a little bit more about me. But again, I don't want to talk too much about this. I want to talk in terms of like analysis. If you're starting off to become a real estate investor or real estate wholesaler, then this series it comes down to like breaking through if you happen to be getting stuck a lot in terms of analyzing properties, because I'm not sure if your process of analyzing is analyze first then do like the cold calling, or if you're cold calling and while you're on the phone you're able to like analyze deals through that as well too. And so this breaks down whichever route you want to do, but I recommend going the second way where you're actually on the phone talking to either the seller, the agent, whoever it is that you're reaching out to in terms of like calling. It really helps it out. It's going to help out your tool significantly, especially when you're under pressure. You're able to analyze things a lot faster. So whichever way you like to do like your analysis, again, I recommend just do it. Don't waste your time doing it beforehand to like, oh, this is a good deal, this is not a good deal. Just get on the phone and let that phone be working and then get the answers that you need to ask. If you need help with asking questions or what questions you should be asking when it comes to reaching out, I do have on my website at eltonvargas.com the slash education. There's an educational series where there's previous Zooms and also some educational tips and tricks on different things in terms of like real estate, not just real estate wholesaling, but real estate as well too. So everything's on the educational side. It is complete for free for everyone to gain access to that, books and a bunch of other things in there. So check it out. I'll even pull it up so that we guys can able to see from there. So now in steps of like real estate wholesaling does break down to quite a few steps. These are the major steps into it. Each major step does have like smaller steps under it that basically make up that full series of events. But the main one that we're going to be focusing for today is going to be the estimated repairs or the maximum allowable offer for our analysis. And so we're going to get dive into it. Very first thing that we have to learn about analysis is understanding what the property will be worth after it's fully updated, or what we like to call its ARV, after repair value. Basically, if you find a property that is fully outdated, let's say 1945, how much is it going to cost to fully update the home and then bring it up to like 2024 standards? If you want to bring it up that high, sometimes you can take it up even higher where you bring other luxury items and things into like the renovations that I can bring more value to like the property. It all really depends like on your area as well too, lot size of the property, how big it's trying to get. So there's a lot of factors into it, but the more you put into it, sometimes it will be worth more, and sometimes you'll basically going to be breaking even. So you do have to be prepared for that. But these are things that you do have to keep in mind because again, your end buyer can put more, could put less, could put just arrive the average. It really depends on what they want to do. So, but the very first thing we have to understand is knowing how much would the property be valued. And the way you find this out is by finding comparables, which we'll talk about that in a second. But mainly about this section is knowing how buyers across the nation are going to be very differently. Not every buyer is going to be the same. You are going to have common ones, like investor one and two are going to be the most common ones. Then you're gonna have investor three, four that are gonna be doing like their numbers and their due diligence very differently than anybody else. That's because they either been in the business for a long time and they already know like their margins and their profit and their dollar revenue or ROI. So it really comes down to like getting to know your buyers, but also again putting yourself into that buyer's position so that way you can start analyzing as if you're buying the property yourself. The next thing about properties and when you're analyzing and looking for the repair is estimating the repairs. How much is it going to cost for this property to get fully updated? It is very different upon some states, California, Florida, New York, Texas, Washington. There are and other Massachusetts could be another one as well too. So there it does vary per state from time to time, but across the nation, we like to stick to like average numbers because again, it really comes down to like I can tell one end buyer, hey, this property needs around $60,000, and they end up telling me like, oh, this actually needs $120,000. Then I bring it over to the same property to a different buyer. They're gonna end up telling me that the property doesn't need $60,000. They can actually get away with like $40,000. So across the nation, it's really gonna be very different, especially in your like in your market area. So once you get an understand of how property conditions are, buyers, whenever you're going to be bringing a property over to a buyer, they're going to give you that feedback. So take that feedback in with you. That's basically going to be your data. So that way they can start telling you and you start get like a grasp of how much repairs will actually cost in that specific area. The other states, like the main ones that I mentioned, California, New York, Florida, Texas, Washington, Massachusetts, those states are going to be more heavy on the labor side. So the materials are going to be the same throughout the nation. But when it comes to labor, that's where the labor is going to be different costs. So that's why repairs are going to be very differently across the board. So stick to these averages, like averages in the light repairs are going to be $10 to $20 per square foot. Usually for these are going to be more rental properties, either single family or multi-family properties that just need like a quick makeup update. Just repaint it and retouch it up on little things, just again to like that way it's fully it can get back to living conditions and like a great again, mainly for like rentals, it's only for this. Next is going to be like the average repairs. Average repairs are going to be more for like fix and flippers. This is like the main one that you're trying to look for, someone who's willing to fix and flip, see how much they're trying to get like on their investment. If they're looking for a specific margin percent, dollar margin return, or a specific ROI on the return. So it really depends on what exactly they're looking for that. But for that average repairs, it's going to take a little bit more work. Usually it's going to take like a lot more work on the heavy places, kitchen, bathrooms, flooring, lighting, walls. Those are going to be like the major ones for like average repairs. And then maybe some external ones like siding, roof, windows at times as well too, or just update like the utilities. And the last one is going to be a full gut job repair. This one it is going to be like a very one. Gut job repairs are basically going to be properties that are fully like disgustingly there's mold growing, so it kind of looks like you have to tear everything down from it. The only thing you won't be tearing down is like the structure or like the framing of the property, but everything else will have to come along. And then when you're tearing everything down, you probably find more things, so it's going to take quite a heavy amount of repairs. for it. And then this is where sometimes some buyers will tell you like, oh, it needs actually this amount, and then you got to start seeing like, oh, why is it gut job repairs when gut job repairs are going to be very different. Again, gut job, average, and light repairs across the nation are going to be very different. And so that's it. That's the whole thing about it, is understanding your market area. Um, Sometimes even just networking, attending network events and asking questions on those network events from other real estate investors. You're able to find more about the market that they're looking into. If they're in the same market as you, just ask questions with them, just engage. It's something about reaching contractors as well too. How much would it need for a full kitchen remodel? And you can send pictures. If you're looking at working with the seller directly, you can send pictures from your side. If you're working with an agent, have the agent take updated or the most recent pictures and have them sent to you, so that way you can send it over to a contractor and you can get rough estimates. So there's a lot of different ways you can get repairs, but what I'm trying to get across the board with this section is stick to averages, just because again, averages is going to give you that average number, because it's going to be a plus or minus game when it comes to repairs, especially when you're reaching out, when you're notifying end buyers what they actually need in terms of repairs. You're going to get quite a handful of answers from there, from based on their experiences. Next, as I was mentioning, is part of the process is of the ARV is how much would it cost to repair, and what would it cost to resell, or how much we are able to resell. Part of it is finding comps or comparables. Basically, we're looking for similar properties, or stick with these parameters, these comp parameters, which basically signify that whenever you're looking at a property, we want to compare apples to apples. So if the property is 1,000 square feet, you don't want to look for a 2,000 square foot home. You want to look for at least plus or minus 300 on the property. So it'll be like 1,300 all the way down to like 700 per square foot type of living space. Square footage on the lot size, this will vary depending on your market area, but a lot of it gets applied into properties that have acres and acres of land into it. So these could be more like farm style, or more like suburban areas as well too. It just really depends. But lot size, again, if you see like a property has 1.5 acres, 2, 3 acres, and that's when you want to start measuring lot sizes into it. Another thing, which it's definitely it's a huge necessity, is sticking within the same neighborhoods or within the same neighborhood of your subject property, and that's sticking with a half-mile to 1 mile radius. This will vary depending on your market area as well too. But part of it, one major factor into it is making sure that you don't cross heavy traffic roads or double yellow line roads. Those double yellow line roads are going to be roads like this. This is one of the major ones over here in Long Beach, where there's going to be buses driving by a lot. There's going to be heavy traffic on buses, cars in the morning and in the evening, where people are getting to and from work. There's going to be semi trucks, Amazon, UPS, you name it. It's going to be a constant heavy traffic flow on this area. Or on this road that kind of basically, this is if you're looking at a specific neighborhood, and then right next to or parallel to the neighborhood, there is a major road that splits it up where there's heavy traffic. You got to think about that double yellow line road as a borderline, where anything beyond that is going to be a whole different neighborhood. So that's the way you want to look into like those streets, which the way you look at it is use Street Viewer. If you're using platforms like PropWire, PropStream, Zillow, Redfin, whatever it is that you're using out there, just look through the Street Viewer, so that way you can get a sense of like the neighborhood, and then check out where those neighborhood borders are basically coming across, because they're going to come across major double yellow line roads. Another one which is not listed is actually railroads as well too. Railroads, it will really depend on like the city and the area that you're looking into. But from there, the railroads, it really depends. If it's a whole different neighborhood, there's like a lot of vacant land or like commercial land in the other side of the railroad, then from there it's going to be that's where you have to like kind of cut it off at the railroad. But then if you have homes on the other side that are similar to the subject property that you're looking into, then that you can definitely get away by using comps from the other side of the railroad. So again, railroads will really depending on where exactly it is that we're going to be looking into. Next, same thing with sticking apples to apples. Make sure that you're sticking with a 1945 plus or minus 10 years on a home. If there's not a fully new remodeled or new construction home like 2024 built, you can't compare that to a 1945. Materials and everything is going to be across the board very, very differently. And the way things were done during those times, again, that's going to be a major factor. So stick within the same years on the properties. Um, the next one, last one, is going to be finding comps. So whenever you're looking for comparables, make sure that you find at least three updated comparables on that area. If you find one, that won't really get away with, you won't be able to really get away with it whatsoever. You need to find three fully updated properties in that area that again have been fully updated and renovated from there. Um, Anything less than that, it's really going to be hard. Maybe you might be able to get away if you already have like a strong relationship with the end buyer, and that end buyer really trusts you, like your due diligence, your numbers. Again, so you already have a relationship going on, and you can definitely get away with it. But again, that's when you have to basically bring yourself to become a trustable person into play. Um, if you have any questions so far, just let me know. If you don't, I can definitely move on forward. But right now, we're going to be doing some live examples. We're going to be doing two live examples because part of the process of this is knowing a few key things. First, understanding how fix and flippers do their due diligence. And the next is going to be how buy and holds, because you are going to come across properties that some investors buy and hold in that area. And they're going to give you like the feedback on what their numbers are in terms of it. Basically, and a lot of it is going to be done through the calculators that I've designed to help you understand that. So it's going to be the complete rental calculator and the ARV calculator. The ARV is going to be more on the fix and flip side. The rental one is going to be a rental. So somebody who's going to be buying a holding, you can get both of the calculators, and there's a new one coming soon. Which is going to be seller finance. Seller finance, I won't touch bases into that, but it's a whole different strategy that you can use as well too, which you can wholesale seller finance as well too, which it's similar to basically rental properties. It just comes down to like what the property can cash flow. So that's why it's going to be coming soon. But how do you structure the deal? It's definitely going to be beneficial to have that. All the calculators right now on the Pro bundle is going to be 50% off for the Super Bowl happening from now. Not the Super Bowl, but like the coupon, and this kind of is happening from now until the end of the month. So take advantage of that because again, you're going to have all three calculators. If you want to pay individually, it's going to be individually for the subscription for those. But we're going to be using some live examples, and let me pull the wheel over here. We're gonna be using the spin the wheel so that way we can pick a random market. If you have a property that you've been like analyzing for like hours and hours and you're kind of feeling like you're struggling on it, you can definitely drop the address in the chat, and I'll definitely love to like analyze like the deal for you so that way we can see if it's a good opportunity or what strategy will definitely work best into that property if it's a potential opportunity. So if you have a address, go by all means drop it in the chat. But today we're going to be checking Greenville, South Carolina. I'm going to be looking at properties that, yes, they are in the market, which, yes, you can find deals on market for where properties are listed with agents. So it is definitely doable. That's the way I started, just working with agents, and then you get a boatload of properties from them. So it's all about finding like the one that makes sense in terms of like the numbers for you and also for the seller because they're obligated to work with the seller directly, and basically if the seller happens to reject it, then don't take it personally. It's just part of the business. That's why you have to constantly be moving on forward to the next opportunity. But part of the process, depending on what it is that we're able to find, because I don't like to filter down too much because I like to leave it open to look at everything. Previously, I used to like break down like the filters if I was looking for a fix and flip for a complete rental. Which actually let me do that. So if we were looking for a fix and flip, for this, or for like if you're looking for deals on the market, or wherever your market is, the way I'll look for properties that are fix and flippers. I'll look for single family homes. I will look for properties that have been sitting for more than 45 days. And I will look for properties that are at least 1,000 square feet. And then from there, I broke down from 700 to 231 opportunities. So if you say that there's no opportunities, there's 231. If you make 100 calls, if you make 100 offers, or if you even make 200 offers, I bet you can get 1 to 2 deals out of these 200 properties. That's the thing. You do have to spend a good amount of time, yeah, reaching out, which I was mentioning earlier. It's always best just get on the phone. Don't do the due diligence. Do the due diligence when you're on the phone, or if you want to get back to it, collect as much information and get back within 30 minutes, like an hour. By all means, do so. But I like to get on the phone right away, just because, yeah, when it comes to real estate overall, if it's wholesaling, fix and flip, buy and hold, seller finance, or creative finance, I mean, whatever it is, that's the strategy, even Airbnb, but the laws are changing on Airbnb. Whatever the strategy is, at the end of the day, it's all about competition. And if you're not beating your competition will definitely beat you. So just get on the phones and start dialing, just because that is really gonna beat your competition in your market area. Yeah, trust me. 200 offers you can get with 1 or 2 deals from those 200, for these 200 offers or 200 homes that we have over here. So let me look for an opportunity over here. I want to also understand like the market area of Greenville, and I just want to get like a sense of where Greenville is. Just because sometimes it creates a border, but then there's like this section of Greenville, and then there's this other section of Greenville, but it's probably like different cities, just like over here in Southern California. There's Los Angeles, but then there's like smaller cities from Los Angeles beyond that. So let's check it out. So what I'm gonna do is I'm gonna look for the oldest homes, see like how long some of these homes have been like already in the market. Off the bat, there's new construction, which I forgot to take that off. I don't want new construction homes. Let's take that away. Take away new construction, and let's take away exclude 55 plus homes. So now, as you can see, there was a bunch of, it went from 230 to like 92 homes. So that means there's new constructions happening. And then when there's new constructions happening, that means there's either contractors that have the money and they're constructing, or there's other investors that buy land and they're building new homes. So for so far, this is a great market for just for like a Greenville, South Carolina. South Carolina, I thought it was no. Oh yeah, South Carolina. For Greenville, South Carolina, where that's a good signal for me, because that means there's a good amount of buyers coming into like play. So this might be hot in terms of like land, not too much on homes, because again, probably the land is cheaper than the homes, and building homes is actually cheaper than brand new homes. So it really depends on how much it will cost over here, which you can do your due diligence for that. But for this purposes, we're going to be using the ARV calculator. Part of the calculated, the number one thing is like finding what the property's price will be. If you're working with the seller, if you're reaching out to sellers directly, and then you're like, well, what if I don't have a price on the property or anything? Ask, hey, Mr. Seller or Miss Seller, how much do you want for the property? Whatever they ask, 80,000, 100,000, 150, $160,000. Put that into play, so that way you can understand. I'm gonna break down the rest so that we can start understanding that. What if they're not willing to give me the price over the phone? They're just asking me like, oh, how much are you offering? How much are you offering? Then we go to whatever the address is of the property. Let's say, for example, this one right over here. I'm just picking a random one. Um, Zillow, Redfin, they all have what they're called. Zillow has their thing called Sestimate. This is where a lot of homeowners that are selling the homes without an agent, they go to Zillow and they're like, oh, my home, it says that it's worth $260,000. So I want $260,000. All right, cool. Well, do you know how much other homes in your area are going for? And how about updates? How much does need on this? When's the last time you updated that? Why is it that you're looking to sell? So it's all about asking questions, because again, you want to collect as much information, especially if you're going to be wholesaling virtually. Virtual wholesaling, you can't travel to that state. I mean, if you have the money to travel to like every single home that you want to bring an offer to, by all means, spend all your money without making money first. But if you can't make the trip, then it's literally about asking questions, asking how much does the property need? When's the last thing that they've updated? What about the area? Just how long they lived in the property. So get to know the seller directly, and then understand how is it that they come up with that number. Do you know how Zillow came up with that number? And then from there, just start building a relationship. Now, if for some reason it doesn't pop up on Zillow, or sometimes Redfin pops up as well too. It usually pops up like right over here. I use PropWire, another free resource that it's available for me to check out, and it will tell me how much the estimated value of the property is. As you can see, Zillow said 216. Then I have PropWire give me $167,000. So then from there, I would average all three of them. If I get all three, or if it's all two of them, I'll average the two of them, so that way I can find what the average number is. So I can get like a picture of what the area will be in terms of the ARV for that specific home. And then again, if you're on the phone, just find the comps through there. So that's the number one thing that you do have to ask or find out what is it that they're looking to get. But for right now, let me look for a property that needs some type of work, especially with some of them that have been sitting already for a while. And the way I'll analyze in terms of how much work does it need, I go back to my repairs. My repairs, I start listing. It doesn't need floors, doesn't need kitchen, doesn't need bathroom, doesn't need paint, doesn't need lights. It all depends on the pictures that I do have available that I'm able to see. Sometimes I do have to get on the phone with the seller or with the agent, and then get more details, and then end up disclosing more stuff that it actually needs. So that's how you have to find out what the exact repairs will be. Because pictures is one thing, but when you look at a property in person, then it's going to tell you a whole different thing in terms of it. But that's the way I want to look through all of these. This is an example that this doesn't really need too much. This could be a good rental property. It already has fully updated updated floors, walls, paint. So it's in really great condition overall. I'll try to see what else it might need. Kitchen, it's all right. Again, this could be a good rental, so keep it very low where I don't have to spend anything too much from it. Just check like any water damages. South Carolina, I'm not sure if it gets humid over there whatsoever. See, even the bathroom, the wall of the bathroom of the tub is already getting yellow. Maybe you have to like repaint that as well too. So it's just little things, but again, you won't see it unless if there's pictures, or again, if you happen to be in person of your subject property, it makes it even better for you to actually get a sense of what it actually needs from it. But through here, I'm just looking through like the pictures, and this is what I'm constantly just doing, looking through the pictures. How long has the property been sitting? And it looks like a lot of it, which again, I mentioned Greenville, South Carolina, it's a great market because there's a lot of new construction, and I'm already finding properties that are really getting taken care of. So this is really like a great market for buyers, honestly. If I were to find a property and I already know for sure there's going to be buyers over here. Buyers are going to be the easiest thing to find in Greenville, South Carolina. This could be a great property already off the bat. It is a big home though. So big homes is going to take a bigger budget. I just already know from my experience, but just from what I'm seeing so far, like this is definitely like an old picture, but there you go. Still the same for some reason. But from the inside, I'm noticing quite a amount of things. Definitely like change the color scheme of the paint. Flooring maybe just depends if there's like multiple, if it changes from tile to carpet to hardwood. It really depends on that, but we always like to keep like a symmetry in terms of like keeping the floor the same throughout the home, and then have like carpet here and there. Definitely change like the carpet on the stairs. Bathroom, well, small bath, not even bathroom, just bath, or bathroom actually, not bath. Kitchen, so it'll be kitchen, flooring, or aka the carpet, just get rid of that. So you can see this is the transition I'm talking about. It goes from tile to carpet back to tile in the kitchen. So that's something that has to get, again, fully keep it consistent throughout the home. So floor, kitchen, what else? What else? Paint for sure. The lighting looks pretty good. Maybe some of the bathrooms just change like the lighting, change like the color scheme of it. I'm not sure if this is supposed to be like a towel or this is like a senior like handle. So that's already four things. So pretty not too much of a work. It's just again, pretty much keeping it consistent throughout the entire home. So it'd be floors, kitchen, bathroom, and paint. That's pretty much it. And whatever this other information the agent decided to put in here. Cool. Um, so those would be like the major ones. If we go back to like the listing, if it's not carpet and paint, then we go to head over to the average repairs. So let's start putting some numbers in. So the property is being sold for 320. So let's put it over here, 320. 320. The home was 2260 something, 2265. So we'd put the 2265. I don't know if Greenville, South Carolina properties have basements. So I have to look through the details here. And let's see if it's like a crawl space or it's like a full basement, no basement. Subdivision, no, two homes, detached. Um, I don't see anything about basement, but what about foundation? I'm looking for foundation too, room, master electric cooling, fireplace, flooring, vinyl, vinyl. There's no vinyl. There's no vinyl at all over here. So look, okay, so no basement. So I have to take that off because some states have a basement. So that's another thing too. So again, very, very first thing is I'm putting myself in the fix and flip. So I'm putting myself as if I'm the actual end buyer. So I'll call the agent. Hey, I'm looking at your property over here. I see that you guys are asking $320,000 for it. Can you tell me a little bit more about the property? And I get a little more sense about it. All right, cool. Well, I'm looking to fix and flip this property. Just do quick touches into it. But I do say I do need major work in the kitchen and the floor and the bathrooms. And then the paints could be very, very quick in terms of it. But for the repairs for average repairs, if you go back to it again, is going to be $25 to $40. I'm gonna say this could be $30 per square foot. From my experience, I just already know, especially South Carolina, maybe it could be more, maybe it could be less. Again, I'm just playing it safe for right now, saying $30 per square foot. If I want always question myself, maybe I'm kind of like hesitant. I really don't like a $30 a square foot. Then I always like to go $5 more. And as you can see, they just changes in terms of like the repairs and how much it needs. But based from what I know, just how much it will be. I don't know how it will be for South Carolina, but again, I'm just putting my estimates that it will need around $68,000. I'm around it up. So $68,000. Sometimes I even ask the agent or ask the seller directly too. Hey, if you were to fully update this home, about how much do you think it will need? Sometimes they'll tell you, oh, like I don't know, I'm not a contractor. And but if you're working with agents, a lot of them do know because they work with some of them work a lot with investors. Be like, you can put 60, $80,000. All right, cool. So I'm in the right spot. I'm in between. I'm 68. Um, Now is the resale. So now you're looking into your profit as a fix and flipper. Maybe you're looking around 15% of profit on your investments. So then this breaks it down to how much the property needs to resell for. So that way you can make your 50% profit. So buy it on $320,000. Pay all the closing costs for you and for your seller. The reason you want to do this as an end buyer is because you can definitely negotiate like the property, especially this property has been sitting on the market for 60 or 200 days. You can for sure get a big discount. Go through the sales and tax history, look how much has the property dropped in price, and then two, look for when's the last time they did a price change. We're already in February, so the last time they did a price change was December. So it is time, and it looks like they only dropped. They started in July from 350, dropped 5, then 20,000, then 5. Then right now it should be another $20,000. So you can definitely probably get it for, let's say, even 290 if so. But that's something that you could probably get it out of already because they should have done another price drop, or maybe they're doing it soon. But you never know. If you get on the phone, the agent will tell you, actually, we're about to do a price drop. Where do you think about bringing your offer? Well, I'm gonna wait for the price drop before I bring my offer in. So I'm gonna play the patience game. but that's something that I'll definitely pay attention for. So let's say we're able to get it for like 290, because again, then it's time for a price drop, and it's been sitting for too long. Then we buy the property for 290, we pay the closing costs for the seller, so that way we can able to get that lower price. Of course, pay roughly around $30 a square foot to renovate the home, which is kitchen, bathroom, floor, and paint. That's what we're estimating right now. Once we, of course, we're gonna have an inspection period to give us more accurate numbers. And then basically the home needs to resell for $445,000 for us to make our 50% profit. Now, if you guys did notice, there is this possible my purchase buy price. This is basically analyzing already how much you should be buying it for if you were to do like a fix and flip deal. So this could be a huge potential offer that you can bring in. And if we were to bring this offer of 203 instead of the 290, and do the $67,000 in repairs plus our 15% profit, then we need to resell the home for $335,000. The reason why that pops up is depending on your investor rule. If you're trying to wholesale, you're going to see the number change. That's basically kind of going to be like your highest offer to bring into the table. If you're trying to buy and hold, that's going to be like your highest offer from it. Again, it's a possible offer, but you want to go through the rest depending on the strategy. So go through the entire process so that way you can see how much it needs to resell for. Go through how much you think it will need in repairs based on whatever it is that you're listing, and whatever it is that if you're on the phone, start getting more details on how much it needs on the phone, and start listing everything, and then estimate and put in how much roughly where it be. Is it more in the average gut repairs, or does it need light repairs from here? Next is, now we have a range. So now that we have a specific range on how much the property needs to resell for us to make our investment, now we have to look for comps or comparables between these ranges. So I got to find something. Am I going to find a comp that is selling close to that 445, where buying it around 320 is definitely, or 290 is perfectly fine? Or am I going to find something lower or close to 334? That's where we have to do our due diligence from here, and then find out where our subject property is right over here on this area. As you can see, it's close, like there's a creek over here, but then you have this major road, West Butler Road. This looks like a main road for all these homes over here, and looks like for this park as well too. And the way you want to look at it is click on your home and then check the area. You're gonna have this little yellow guy. You're able to pull it out and put him into his place over here, and bam, there it is. It's a major road, a double yellow line road, where anything beyond the other side is not going to be a comparable that you can pull. So you want to stick to the neighborhood, which your neighborhood is basically going to be kind of like this north of Butler Road. So this entire circle over here, which I'm gonna use Redfin right now so I can show you guys. So let's look for properties. The other thing that I did forget to mention is, whenever you're looking for comps, you want to look for comps that are within 6 to 9 months. 6 to 9 months is the time period that you want to look for these comps. Nothing older than that, because again, markets are constantly changing, especially for this year, 2024. They will be changing a lot just because of interest rates. So that's something you want to keep in mind. But let's draw this little circle over here. So I'm gonna draw this. So I'm gonna use this little guy to again draw my border, or where I shouldn't be crossing. I'm gonna stick within this creek. So the creek kind of like splits up this neighborhood, and I'm gonna close it out through here. So that's my neighborhood. That's where you want to stick within your neighborhood in your area. Of course, our subject property is kind of like one road, a type of section. But again, I want to find similar properties within this entire section, because this is how an appraiser is going to be looking for comps themselves. Now is again going back to those comp parameters, plus or minus 300 in the living space. We already did our radius, and then now we got to find 3 to 5 comparables that sold in the last 6 to 9 months. So let's adjust this. Let's adjust our square footage. Our property is 2265. So it's going to be, I'm going to say 2300 plus 3. So there's no 26. So I'm going to have to go with 27. And then the lowest I have to come down to, it'll be 1900. Again, it's not very perfect, but at least it gives me like an idea of where it is. And again, my subject property is right on this road. So right next to it, we have all these homes. Then we have like some of these ones over here. So let's start looking for the newest one or the most recently sold. Most recently sold. Let's see how fully updated it is, and what the condition of it is. This is 2,400 square foot home. It's like north of it over here. Uh, so this is a bigger home. I got a feeling. There's like three roads. I mean, three roads, 3 stories for some reason, but it's actually not. Why does it look way smaller than our subject property? See, sometimes that's what it is. Sometimes it's about the lighting of it. Just lighting opens up the space a lot more, or it has like this back shed. So that's another thing that it probably might need brings extra value into the home. So if you're looking at a home, it doesn't have a pool, and then this one has a pool, then that's something else that has to be factored into it. Has like a back shed or like a farm style shed. Great entrance. This doesn't have like a great entrance. So as you can see, this is a kind of like a smaller home comparable to that subject property. This subject property is just straight up massive. And that can definitely be, yeah, look at that. It's a huge slot, which is something I did notice for it. So it's a huge difference like on the lot size. So this is going to be one of these properties that a lot size will have to come into play because I'm looking at a 7840 lot size for my subject property, and this is going to be half an acre. So half an acre is going to be, what is that? Uh, 10,000. I think it's like 12,000. What is it? Acres to square feet. 0.56. Yeah, so I think this could be like 22,000. Yeah, 22,000. So again, this is one of these properties where we do have to consider lot size into it. So that lot size is could be plus or minus 2,500. Our subject property is only a 78 square foot lot, while this comp over here is 22,000 square feet on the lot size. So I have to add that filter into this comp, into finding these comps. So we're going to be looking, what is it, 7,000, 70. As you can see, it's a lot of numbers, 7840. So 9,500. Sure, I'll play that. I'll do quarter of an acre. Quarter of an acre is like 10,000. So yeah, I'll do quarter of an acre, um, down to, they don't have 5,000. I'm gonna go with 65. And so far, yeah, this neighborhood, I had a feeling too. This is gonna be our neighborhood to find the comp. Just because again, our subject property is right over here, and right next to it is, I had a feeling too. This is gonna be it. So let's find out. Most recently sold property in this area, 2.5, sold for 2,200. This is not an apples to apples property. The year was built 2023, so I gotta move on. Hopefully, all of these are not 2023s, 2023, 2023, and 2023. So all the neighborhood homes are not gonna be great comps just because this entire neighborhood is brand new. It was built last year. This is the best comp that I'm able to find. And just because it's not new, it's 1986, but even our subject property, um, it's 13 years of a difference in the age. So basically, I have no comps, no matter. And this is probably why the property is not selling, just because there's new constructions happening. They're selling for 388. What's the average per square foot on all these? Uh, Average is going to be $175 per square foot on all these. So let's say we use all the 2023 homes. This is basically how much our home will be able to sell. So 175, 175, 175. Our home is right in the middle of $400,000, but that means we have to like bring a good amount of materials into it. So it's definitely going to take more than $67,000, just because again, the new recently built homes have again fully updated everything. While comparable to us, it's going to be a 24-year difference on the build, just because our subject property is a 1999 home from here. So again, those are factors they have to consider, but I need to compare apples to apples, and that those 2023 homes are not apples. So this is a subject property that no matter what I want to do with it, I can't really pull a comp. Let's say I go with this one, the 315 home. The price per square foot on this is 150. So let me put the average per square foot. Let's say I'm able to find three of them for $150 per square foot. But over here, I only found one. One won't get the job done. You need to find at least three of them. So then now, as you guys can see, my my subject property can resell for basically my purchase price. My purchase price is $203,000, or once I fully update it, bring in the $70,000 in repairs, make my 15% profit, then I need to resell my property for $340,000. And basically now, if I put in the $340,000 ARV, now I basically analyze it on my actual end buyers. This is how much my end buyers will need to buy the property for. They'll need to buy the property between $170,000 to $190,000. My offer was close to $203,000, so it's a higher than basically than what it would need to from it. But again, that's part of the entire process, is going through how much is it going to need, putting myself as a buyer, how much did I need to resell it for. Now that I have a potential resale, let me find out which side is it more towards. Of course, I did adjust the price just because they haven't done a price adjustment. But let's say I keep it at that 320 asking price, then still I'm asking my possible purchase price is way above from what I actually found, and way above from what my end buyers will actually want to get from it. Because again, they want to go through the same thing. They want to buy it for their asking price, maybe a little bit more than that, because it's definitely negotiable. They pay the closing costs, they put the earnest money deposit, and they make their actual 15% investment. This will tell you how much they will end up making like on the deal. Again, sometimes it depends on the buyers. They look for a specific percentage. They look for a specific dollar amount. This will give you both, so that way you can look into it. But based on my research, it's not a deal because we only found one comp, and that comp did sell a little bit further out back in October. So the prices back in October were a little bit different, but it's not a fully updated home either for our subject property that we found, that 316. Uh, it's in a little bit better conditioning, but it's not fully updated. It still has like I like the wood material. It's just the cabinets get a little bit of touch, maybe just the appliances from there. See what else. Color scheme, flooring is good. Looks at the carpet. It's again, it's in great condition of a home. That's I'm not mad about it, but there's little things that I will definitely want to do, or maybe I just don't want to do anything if I were to buy and hold this property. But again, this strategy is fixing and flipping. So maybe I can get away if I were to look for the property for buy and hold. So a buy and hold investor, then now we're talking close to like the asking price. Um, so how much would I actually need to get it on like on the contract for? My possible purchase price 224. Over here, the buy and hold, this is how much they want to buy it for. And then this is based on my ARV, what the property will be fully once if it gets like any type of renovations, aka the $67,000 of repairs. How much will it be worth? So that way they can pick up equity if they want to rent it out, whatever it is that they want to do. Or that's their strategy, but they're going to be buying and holding this. That's how much they will want to buy the purchase of the property for, based on the current condition of it and the repairs, and basically what's happening around the neighborhood. So even the buy and hold will be too expensive. So again, I have to work my way down to that 300, even $300,000 offer. That's gonna give you, I'm able to bring in around $210,000. That's gonna be my highest offer from it. And from there, I can make between I can make $7,000 $7,000 wholesale fee. maybe I can work with this aggressive end buyer, let them know like, hey, you're buying and holding this, so your strategy is looking more long term and play the taxes game and depreciation and appreciation at the same time. Depreciation on the taxes, appreciation on the time on how long you be holding, and from there, that's going to be their story. But basically, this analyzes both on what's the actual truth, what's happening in the neighborhood, in the area, and then how much where your end buyers will need to will actually end up buying the property for or buy your contract for, depending on how much you want to add your wholesale fee. If I want to play aggressive and then tell them like I'm looking for $225,000, then with both of them, they will do like their numbers. Again, they're gonna give me their feedback, and we can probably negotiate from 225 for a $15 wholesale fee down to like maybe $10,000. So that's where the negotiations will have to come into play. Even if the numbers are very light, again, it's all about getting the property at a way lower discount because I'm the one doing the hard work. I already got the property in the contract. All I'm asking is for my fee for doing all that work for them. And then they're just coming in with the money, and then whatever it is that they want to do, let them do their game from there. So that's the way you will analyze the property in terms of like a fix and flip, or if it's going to be a fix and hold type of strategy. I know it's a lot of information. These recordings do get recorded so that everything will be available on the real estate educational side of my website, eltonvargas.com. All previous Zooms are already in there. Again, there's books, there's questions, files from contracts, resources. Everything is pretty much on the educational side. And then, or if you have any other specific questions, I do have one-on-ones available, but that's pretty much our entire ARV calculator. If you have any questions, you can go and ask them, but I still do have to do the example of the complete rental one, where we're going to be analyzing a property in terms of its rent and cash flow from there. But I'm going to leave it open really quick for any questions from anybody. How many people are, oh, uh, hi, Malika, welcome. Um, let's see how many people are on. But yeah, if you have any questions, you can by all means drop it in the chat. But if there's no questions at the moment, I'll just continue going from there. Let's go to the rental one. All right. So no questions? No, nothing in chat. All right. Of course, my pleasure. All right, so let's look at some rental ones. So let's do the example of a rental property of how much and how to analyze a property that needs some type of rent or it's already being rented out, and let's check it out. So let's go back, zoom out. Let's go back to our city, Greenville, South Carolina. Then our subject property was all the way down there. Wow. All right. So now let's look for. So now, when it comes to a rental property, it can be either a single family home or a multi-family home. Just so I can expedite the process, I am going to be using a multi-family home because it's literally the same steps. Even if you're looking at a single family home, I'm going to be going through the same steps for it. So I'm going to be looking for a multi-family home. And what I'm looking for these is quite a few things. I'm basically looking for the market area, how much would it actually rent for in the area, how much is the seller or the agent asking for it, and how much is it currently being rented out for, if it's being currently rented out for, so that way I can get the estimates on my income, and then of course subtract specific expenses. I can go specific into detail on expenses, or I can stick to broad. So that's the cool thing about the calculator. It is up to you on how you want to analyze it. But for right now, let's try to find a property first. And I'm looking for a property that has that is already fully updated. That way, there's minimal work to be done on the property, and it's already bringing. There's already tenants into place, and then the agent actually puts in the description how much is it being rented out for. Because when I come across agents that already have that ready to go, it makes my due diligence even better, and my offer. It would expedite my offer into the process. So for this example, I don't see anything about numbers in terms of rent besides a long description of what the work was done. So that's not really going to work out. This is a big home. It is a little bit outdated. There's no pictures onto it, but we do have leases. And let's see what kind of property is this. So it's a duplex. Duplex means two, and then there's triplex, and then there's quads, and then from there it's just multi into more apartment ones. Great location. What makes it a great location? Because I saw it was like way south, way north, I mean, away from everything. Don't miss on a chance. Location. Okay. Vacant. So one side is vacant and the other side is, wait, what? Don't miss out on the chance on this property in a deal with existing tenants. So one side has existing tenants. Oh no, one side is vacant and the other side is bringing tenants. The only thing is, how many units is it? Because I see it's 2-3. I mean 4-3. Is it a 2-2 and a 1-1? Because that's the thing that really determines it. Um, I like how they put the rent. I just don't like how the description says it. So let me move into like something else because that's something where I have to find like reach out to like the agent and then find out because that's the difference between if it's a 2-2. I don't know if which side is the 2-2 and which side is the 1-1 from here. This one doesn't have any rental. This is why I hate. It's like a love and hate relationship with agents. This one doesn't have anything. Again, I'm trying to find out. This one still needs work. Uh, Here, let me go through the description. What travelers, no HA, called today for details. Okay. Oh, here we go. We got some numbers. All right. So this is a 3-unit apartment for rent. A lower rent for 1359. Main house, attic apartment rents for 985, and detached garage rents for 75, or live in the main house and rent the other two apartments. The lower level main house has 3 bedrooms, 1 bath. All right, cool. Hey, as long as it has numbers, that's what I truly care about. So let me put all these numbers into it. 3 bedrooms, 1 bath. Um, Attic apartment and garage apartment. The attic in main house, it's a 1 bedroom. Okay, so this would have to put in. 449 is the asking price. So this will be 440, 449, 499, 499, 499. Asking if I were to put 2% down, uh, maybe you can get like I'm gonna leave it at 8% interest rate. I was gonna put 7.5, but I'm gonna leave it at 8 just so I can overestimate. My down payment is definitely gonna be a lot. It's gonna be $100,000. My monthly payment is gonna be 2,900. My closing costs range between 2 to 5%. I'm just gonna highball it and go with like that 5%. So my initial investment, or just how much I need up front, to take over the home and basically buy the home. This is how much I need to bring over to title escrow. I need to bring in $124,750. That's if the property cash flows. So let me put in the numbers really quick. One of them was a 1 bedroom, 1 bath, which is being rented out for. This is the attic apartment. It is rented out for 995. So I'll put it over here, 1 unit for 995. The next one is the 3-1, which is the main home, is being rented out for 1359. So 3-1, 131 for 1359. And then the garage apartment, I'm guessing it's gonna be like a studio. Oh, it's a 1 bedroom, 1 bath. Also 1 bedroom, 1 bath is being rented out for 795. So let me add those two actually. Oh, let me close this. That's the ARV one. So 995 plus 795. And there's the thing about it. If one is being rented for 795 and the other, one is being under rented, so it has to be very evenly across the board, especially if they're 1 bedroom, 1 baths. So I put one just because I'm not trying to put two units and then add it up. So I summed it up on the unit, and there's basically two bedrooms, one bath. Um, there's, I mean, one bedroom, one bath. So it's 1790 for the one bedroom, and then 1359 for like the main home. I don't see that there's any extra income, so I'm gonna leave it as is. Like the garage is pre-rented out, laundry it's probably inside, or each of them have that, and then there's no extra income. So my monthly income on the rental side is 3,149. So the property is bringing me a gross income of $37,788. So that's basically multiplying 3,000 times 12. That's my yearly income. Now my expenses. So now I got my income. I found a property, I found my income, and now let's break down the expenses. Expenses, I can go with the standard rule of 40%. So 40% is everything already into it. And that's having somebody else manage the property for me. If I'm local and I want to be like the landlord for the property and I want to manage the property, then I'll drop it down to like 30%. So 30% if you're managing yourself. Or if you want to break down all your expenses, you can break down all your expenses. Basically, whatever it is on the monthly basis, taxes, insurance, HOA, maintenance, vacancy, and property management. You can break down each single expense. But right now, I'm gonna play with my standard 40% rule, which my 40% rule is my expenses are $15,115 per month. I mean, per month for the entire year. So now I have income, I have expenses. Now my net income is $22,000, six twenty two six hundred $22,672 or $1,800 a month, which is really good so far. Now we have a full analysis of the property. Gross rent multiplier, this basically means how much the property is worth comparable to the scheduled income, basically the monthly income for the entire year. The lower the number, it is better on the because you're getting like a lower price and but higher rent. That means you're again, the lower the number it is, the better it is. The higher the number is going to be, then it's going to be a little bit more riskier. Next, this could be cap rate. Cap rate determines basically how much the property is bringing in terms of like net operating income to comparable to the actual price. You can find what the average cap rate is on your area. So let's say, for example, right now we're in Greenville, South Carolina. Copy the city and then type in average cap rate in and then paste your city with your zip code, and then you're gonna have Google give you some feedback. It looks like LoopNet and average cap rate in buildings for sale is 5.73 based on Greenville, South Carolina. So our looks like we're right there on the average. We're actually below average. So the way cap rate works is the lower the number, the risk, there is higher risk again. The higher the number, that means you're buying the property at a lower price, which lower price, more income is better. So my strategy whenever to play it safe, the standard rule is between 8 to 10% and cap rate. So the average is what was it? 5.7 something, 5.73. This specific home is around 4.54. So it's a little bit riskier than the average. But again, if I want to come up to like that safe net, which is 8 to 10%, I have to estimate that in which I will be able to estimate in a couple of seconds. I just want to continue going through the rest so I can explain. Next is cash on cash a return. So so far this property based on the asking price and all the numbers, it's not bringing me any income. And you might be asking like, well, why is it not bringing in income if you're bringing in $22,000 and $672 in of net income? And the reason is mortgage. We didn't consider mortgage as part of our expense. So there is the main expenses, but then the major one of them all is going to be debt service or AKA mortgage. So my net income was $22,000, but my mortgage and my interest, which is my principal and my interest, my AKA debt service, it's a total of $35,000. So if I subtract $22,000 minus 35, is basically cash flowing me negative $12,000 every single year. So every single year, I'm losing $12,000 on this property, which is good because I can write it off on my taxes. But it's also bad because now it's going to take even longer for me to break even. So again, I'm looking for a property that is safe to invest in, is bringing me some cash flow because I'm looking for something positive into it. And of course, I'm looking to buy the property at the lowest cap rate or at the lowest price. So then now, if I want to play my strategy between 8 to 10% cap rate, I continue scrolling down. And then right here is my possible cap rate purchase price. So again, the lower the number it is, the higher the price of the property is worth. So the way you want to strategize when looking for long-term investment rentals is basically look for the highest cap rate. Highest cap rate is going to give you the lowest price on the property. Whenever you want to sell the property, you definitely want to sell at the lowest cap rate because that means the property picked up on a huge, significant amount of value. It cash flowed throughout your years. So you basically picked up a huge amount of capital on just this one property that was being rented out to three different tenants. One in the main house, one in the garage, and one in somewhere else, or in the attic. So you have three different tenants that again brought you income and the property cash flow. But again, you bought it at a low price. So again, lower price, less expenses, but then the property brought a good amount of cash flow. And then over time, the property appreciated, let's say 10 to like 15 years, it appreciated from $226,000 all the way down to $500,000. That's basically how you want, and that's how you want to sell like your properties in terms of like rentals. So again, right now I'm trying to acquire the property and I need to acquire it again between 8 to 10%. So I'll start my offer high around 226. Then I'll come down to like 9%. And then my lowest one, my highest offer I'll bring into the table it will probably be 283, maybe come down to like 280. So that's where I need to purchase it. But now let's put in the numbers. Let's say I'm able to get it to 250. If I change this from $500,000 to 250, which is a 50% discount, because again, I'm not bringing any income so far. Am I going to be bringing in some cash flow now? Let's check it out. Let's see what the numbers say. And it looks like I am bringing some cash flow. So I'm bringing in $5,000 every single year. My net income it stayed the same because I didn't change the income of the rent on the properties. It just I changed the price on the property. If I change the price, then a lot of the major factors, which are mortgage and my down payment, my closing costs, all those numbers are going to be changing from it. But the rental side, nothing changed on that. My expenses on my rental side didn't change nothing whatsoever. It was just mainly the main price. And if I change the main price of the property, then that's how it's able to bring me some cash flow. So maybe that offer is definitely going to get rejected. So let's say 283. How much is it going to bring into me? Around $283,000. And let's see, it still brings me around $2,000 every single year. That's perfectly fine. I'm buying it at an 8% cap rate. Again, I want to buy high and then eventually sell it low. But and also depending on what the property appraises. So if the property I'm able to get it for $283,000 and the property happens to appraise for that $500,000 price, then I already pick up a huge amount of equity on the property which I have to wait 6 months for me to take out that equity. And guess what I'll do? Whenever you take out equity, it's around 70% of the property's value. So after 6 months, I do like an appraisal on the home, and again, it values around 500,000, maybe even 550, who knows? I go to the bank, they'll tell me what the property appraised for, and they'll give me 70% of the property's value. Then now I have around $350,000 of equity just by buying the property at a lower price and then play the waiting game a little bit. 6 months, that's the legal standard for you to get your property refinance. The bank is going to give me $350,000, which then I'll look for another property that will cash flow And then if it cash flows, of course, buy again close to that $283,000 mark. And whatever money I have left over, I can invest into like other things, or I can go shopping from there. So those are different strategies, but that's how you are able to analyze a property that is going to be in terms of like renting. So when it comes to properties that are fix and flips, are going to be more analyzing of what the neighborhood is looking like when they're fully updated. How much is it going to bring in repairs? When you're looking at a property that it's fully rented or a rental property, it's all about the numbers. You have to let the numbers speak. Sometimes they're either the seller or the agent is gonna give you misinformation. So it's really up to you for to do your own due diligence and then find out how much is it going to be renting out. But that's the thing. I like to look for properties that are fully updated and look for properties that already have tenants, especially when when the tenants are in a contract as well too, or the lease expires on this day. Hey, they might be long-term tenants, so you never really know. So I don't really have to worry about finding somebody, getting the property manager to look for somebody else. The tenants will let me know whenever they want to move out, but I'm gonna have another property management manage it for me. All I have to worry about is play the patience game, play the taxes game, play the depreciation game. And once I'm able to pick up a good amount of equity, refinance, get the money out, and then look for another similar property that can cash flow. I know it may sound easy. It is a waiting game. So that's the thing. It's definitely paying like a huge amount of patience in real estate. But if you're consistent and if you do your due diligence property, and just like how I was just showing you, some investors take it even deeper into like further due diligence. They have like a specific person who just analyzes. They want to get down to like the last penny. Honestly, that's just a waste of time. But everybody does things very, very differently. But if the numbers, the main ones when it comes to looking at rental properties, these are going to be like the main ones into it. And again, it's all about just getting on the phone and start negotiating on the phone. That's how you got to get your answer. That's how you got to get your offer submitted. And if you get your offer submitted and it gets accepted, then hey, you got a deal going on. But that's pretty much it in terms of like the rental calculator. Again, I'm gonna leave it open just because I know the complete rental side, it is a complex side to like understand. You have to understand like all these analysis metrics. But the main one I really want you to focus on is on cap rate. Understand how much the cap rate is at currently in the area, what the cap rate is on the property, and of course, the strategy is to always play it safe. So between 8 to like 10% and higher, it's always best to look into it. But I'm gonna leave it open for some Q&A. If anybody has any questions, by all means, go ahead and drop your questions on. Oh, actually, let me allow you to unmute yourselves. All right, you're able to mute yourselves if you have any questions whatsoever, or you can drop it in the chat. No questions? No? Going once, going twice, 3 times. Sold. All right. So no questions. Okay. So yeah, that's pretty much a wrap for definitely interview more. It is a bit complex. I'm currently starting for California real estate. Uh, okay. Also, you're studying for your realtor license? Yeah, awesome, awesome. Okay. Yeah, I mean, uh, getting your license, it comes in handy. I mean, I'm not sure if you're trying to pursue like real estate, but yeah, understanding uh basically all your buyers from first-time home buyers to down payment to interest rates at the moment, and of course good faith, and making sure you have all the information really comes out in hand. So yeah, definitely I'm glad that this is able to help you out at least a little bit to gain that knowledge, because when it comes to being a realtor, which again I reach out to a lot of realtors, it's having a lot of information in front of you and just being very consistent, but also display that all that information, because again, you never know who your buyer will be. If it's a first-time home buyer, an investor, a hedge fund, a corporate, a bank, you never know who the end buyer is. So you want to put a good amount of information for everybody to keep it kind of neutral. Or if you want everybody to like call you, don't put a lot of information and then the phone's could be ringing, but that's gonna add more stress. So you have to strategize in terms of it. But yeah, definitely be a sponge right now on your journey. Absorb as much as you can from all aspects, wholesalers, investors, and again, everybody. But yeah, definitely learn. I'm glad you're able to learn at least something else to help you out in your journey. Um, but yeah, but also too the recordings are available. So if you want to go back to like other ones, other recordings, they will be available on my website, eltonvargas.com/education. And just or if you want to have any questions one-on-one too, but I mean, I'm not sure if you're already working with a broker, or if you're trying to wholesale as yourself as well too. Always be safe on wholesaling because wholesaling laws are changing throughout the nation. And so just always be updated on all the laws as well too on what's going on. But your broker will definitely do that for you. Um, but if there's no other questions, then that's pretty much our wrap for today, guys. I really appreciate you coming in. Let's say Monday, February 5th. The next one it'll be on Wednesday, 6 p.m. Pacific Standard Time. Um, Oh, are there any restrictions for non-US citizens with wholesaling? No, it's just, what is this? For non-US citizens, it's just the way it's gonna go. Whenever you wholesale, it's going to be either like a check or a direct deposit, and you're gonna receive like a 1099. So just like a real estate agent, a lot of them get 1099s. But just double check like on the laws. I'm not a financial advisor. I'm not a lawyer or don't know like if there's any further restrictions from non-US. All I know it's like your how your pay structure will be, which will be at 1099. So that's the only thing that you have to worry about and make sure that you put some money away for like taxes. Um, but I would recommend to like check further into it because I haven't had too many non-US, and maybe the ones it's just pretty much like it's standard for like wholesale across the board because there's what's it called? There's people that wholesale from other nations. So it's just like you have to understand like the laws. That's the thing. So understand like the laws and what the regulations are. Depending if you're here in California, over here you're legally allowed to like you don't need to have like your real estate license whatsoever, but you're able to wholesale. So it's just California is very expensive, so that's the only thing about it. But I just double check, like I said, double check on the laws and regulations for non-US citizens. But if there's any other questions, of course, my pleasure. Uh, no other questions? Anything else? So you are able to like unmute yourself as well too. It's up to you.
Hey, I really loved the way that you presented your information today, and I'm literally about to go on your page right now and just subscribe to it because you're really detailed, and this is something that is of interest to me because even though I am studying for the real estate exam, I do have a massive interest in investing. That's kind of where all of it originated from. So,
Oh, you
yeah,
said in investing?
yeah,
Oh,
investing and
awesome.
wholesaling and all the different areas. So it's
Yeah.
really cool to learn about these different kind of areas just
Yeah.
to be more like well versed and also to get closer to what I want to do, you know?
Yeah, and like mine when I started my journey, it was all through realtors. Honestly, like I knew like a little bit of really like my own due diligence, YouTube videos, books, basically everything from there to like do like my to learn self-taught, and then from there it was
Mm-hmm.
just realtors, just working with them. I'm good at numbers, so the numbers come like crazy easy for me because my major
Mm-hmm.
was aerospace engineering, so like numbers were easy for me, but and also my background sales and marketing, so I'm always very communicative,
Mm-hmm.
and so I always try to like explain things to like the best of my ability, and just putting those two together plus real estate, it really like opened up my mind. So in the beginning I was just learning from everybody, And
Yeah.
it's again, I learned from realtors, from investors, from hedge funds to banks to regular people. So it's really a whole like spectrum that you have to like learn. So yes, it's definitely opens up, real estate opens up your doors infinitely to
Mm.
everybody and everybody. But the thing
Mhm.
about it is there are laws and regulations, so just be updated through on everything. And
Mhm.
yeah, it should be
What
really
made you
good.
get started in this area? Like, was it somebody that you knew or?
I was just trying to escalate my sales. I was just like slowly like well, I started from like a retail to like independent transportation to my last one was like a gym, and then from gym I was like I need to go something higher. I don't want to do cars.
Mm.
Cars is just like there's already like a bad connotation with cars. And I'm like I'm good with
Mhm.
numbers, I'm good with sales, but I just don't want to I don't like doing cars, selling cars. I was like, I would
Mhm.
prefer like something that it's tax incentive. And
Mhm.
I really liked real estate, like overall. It's just always like a major topic that always gets brought up. That it's good for taxes, it's good for this. I'm like, all right, cool. So back it
Mhm.
actually started back in 2020 when we were all at home because of the pandemic, where I learned a lot into like wholesaling. And again, when we got back into work. Then I took some time off, but I was like, I want to get back to it because I really liked it. It really makes sense. The numbers, it really came out really good. Like it sounds like in the numbers, and it came out really easily for me. So I was like, you know what? It's time for me to change my careers from a retail and from all type of sales to just specifically real estate. So that's why I was like, let me take a leap of it, and
Oh,
it's
wow.
the best thing. I love it.
Yeah. Oh my God, that's an incredible story. That's motivational as well. That's
Yeah.
really cool. And
Uh,
even just your passion for the subject, it comes across in the way that you teach it, So yeah, that's the most passion I've seen in anybody talk about this subject. So thank you so much for that.
Of course, my pleasure. But yeah, if you have any questions, I'm available for one-on-ones. My contact information should be in there as well too, so you can text me as well if you have any questions specifically. But yeah, I'm an open book on anything. But again, you already learned the books on real estate. Again, that's where I learned. So I
Mm.
think a lot of the realtors that I talked to in the beginning and which leads to like taking action. So I took the action. I was like, all right, let me get into it. Let me get into it. And just talking to
Mhm.
people, it really helped out for me to gain like my knowledge. And I didn't
Mm.
start here in California. I actually started in Kansas City. Kansas City, it's split up into like two states. So
Oh,
those were two different laws. I was just a learning sponge.
yeah.
And
What
so
about when you came to California? Because I feel like a lot of the events that I go to try and meet people in the industry are usually maybe from Meetup. I haven't tried like Eventbrite, but yeah, where do you recommend?
I'm sorry, can you repeat your question one more time?
In terms of like you said that you spoke to a lot of people in the real estate industry and lots of
Mhm.
different people that helped you in your journey. Was that just through like passing by, or did you go to any specific events from like
Oh,
Eventbrite
I,
or?
I network. So once I came across a meetup, like meetup.com, that's where I actually look for like a lot of real estate events. And I,
Mhm.
I still attend a lot of events. So I'm constantly networking over here in California. I'm in
Mhm.
Southern California. So a lot of the
Mhm.
people that I've networked with have been over here in Southern California. And then some of the
Mhm.
buyers that I've come across, they invest all over the US or specific states. And some of the
Mhm.
states that they invest, I actually have learned a lot from that market myself into like
Mhm.
wholesaling and just fixing and flipping and just like understanding. So
Mhm.
all of it has been through like Meetup or just locally networking. And then again,
Mhm.
you never know who's local and who's not local whatsoever, and just get in
Mhm.
touch with them. So
Yeah.
um, even tomorrow there's a meetup that I have going on, but this one it's optional for Zoom or to go in person.
Mhm.
I'm gonna go through Zoom just because it's raining right now. I'm not trying to drive over here.
Yeah.
But yeah, it's just I'm constantly like just talking to other people, getting understanding of how they do things, and just again constantly learn from them.
Yeah, yeah, I'm in Southern California as well. So,
Awesome.
um, yeah, this is a really good event because I was like, I've just come back from travel and this was really convenient for like easing back into studying and getting my motivation back up. So,
Awesome. Well, I'm glad I could help. So I hope you're able to join us again. This is hosted every Monday, Wednesday, and Friday. Just
Okay.
again because again part of which you could end up doing your due diligence as well too as a real estate agent is finding out what the properties are worth. A lot of real estate agents do like smaller periods, but
Mhm,
basically everything that I show is what anybody in terms of like real estate has to do. They have to do
mhm,
your due diligence and then find like the numbers. Some of them take a little bit longer. Some of them are really quick, but it's all about practice. So the more you
mhm,
practice it, and again, sometimes get somebody else's perspective definitely helps out significantly because they give you
mhm.
like a market insight. And the more you know about your market, it just makes everything else flawlessly
Mhm.
easy on your side.
Okay. When I subscribe, is that where oh, sorry.
Mm.
When I subscribe, is that where I get the updates on when the next sessions are, or is it through the
Through
meetup?
through Meetup,
Ah, okay.
which everything's already pre-scheduled from now until like the end of the year to like end of December 2024. So they're
Mhm.
all organized Monday through Friday from now until the end of the year.
Ah, okay, okay. That makes so much sense.
Yeah,
All
and
right,
then
I'll sign up for those then.
yeah, so
But
hopefully I'm able
thank
to
you
see
so
you.
much.
But lovely
Yeah,
meeting you. And again,
thank you.
continue your journey and the best of luck. And I'm not sure when you're taking the test or if it's still a little bit while, but I definitely wish you great luck. And I'll for sure know that you'll definitely pass.
Thank you so much. Thank you for that, Elton.
My pleasure.
All right.
You have a
I'll see
lovely
you on
night.
Wednesday.
All
All
right, I'll
right, you
see you
too.
Wednesday. All right, take care. Bye.
Bye.